This is question number 3 on QZ5 for module 6. Analyzing inventory footnote disclosure, General Electric Company reports the following footnote in its 10K report. So here we provided with basically two numbers. This number, after you summing up the inventory across different categories, is if you look at this less revaluation to LIFO, this means this row number is basically the FIFO, first in, first out number, and then we subtract each of the corresponding difference, which we call the LIFO reserve. If you go back to the lecture slides, and this is called the LIFO reserve, right? If you go back to the lecture slide, the FIFO inventory equals LIFO inventory plus LIFO reserve. So basically, we're just looking at this column here is the FIFO, and then subtract this LIFO reserve, and that equals the LIFO amount at the end, the table. So the company reports inventories using the LIFO inventory costing method. And what is the balance in inventories reported on GE's 2009 balance sheet? So this is basically the number reported at the bottom of this balance sheet, 11,916. And then what would GE's 2009 balance sheet have reported for inventories had the company used FIFO inventory costing? And so basically, the number in this row is the LIFO number as we just FIFO number as we just analyzed, 12,455. What cumulative effect has GE's choice of LIFO over FIFO had on its pre-tax income as of year end 2009? So as of year 2009, under LIFO, the inventory balance is lower. So that means under LIFO, the cost of goods sold is higher, right? Because these two has an inverse relationship. So if cost of goods sold is higher, and then we need to subtract cost of goods sold from sales, and then deduct other expenses, then we can arrive at the pre-tax income. So we subtract a higher number, hence the pre-tax income under LIFO will be lower, right? Lower by this 529 in 2009. So we just look for the answer which matches our analysis. The cumulative effect is that pre-tax income has not changed, and that's not right. A cumulative effect pre-tax income is non-existent. That's also not right. The cumulative effect is that pre-tax income has decreased. So that's basically what we found. And LIFO means it matches more current inventory cost against the current selling price. And that's exactly what LIFO is. Last in, first out, right? Last in. And so the more recent cost matches the current selling price. That's avoiding the recognition of holding gains. And I think this we should choose this third one. Assume GE has a 35% income tax rate. As of the 2009 year end, how much has GE saved in taxes by choosing LIFO over FIFO method for costing inventory? So in this part C, we saw that the pre-tax income is lower under LIFO and lower by exactly this difference 529. So then we just need to multiply by the tax rate to calculate how much lower taxes under LIFO is for compared as with under FIFO. So we just basically need to multiply this 529 by let me just use this number equals 529 times 35%. So that gives me 185.15. So we need to be careful in looking at the rounding requirement. Round your answer to the nearest whole number. So we just need to keep the decimal, forget about all the decimal places, and just keep 185. And when I say forget about, I already considered the rounding up or rounding down rule. Here I just round it down because it's less than 50 after the decimal place. Has the use of LIFO increased or decreased G's cumulative taxes paid? And we just analyzed it should be decreased, right, under LIFO. And what effect has the use of LIFO inventory costing had on G's pre-tax income and tax expense for 2009 only? So far we're just looking at the cumulative impact because that's what the balance sheet is. It's looking at the cumulative effect. And now the question is shift to asking what is the difference between the pre-tax income and the tax expense for 2009 only. So it's specific to that year only. And then we just need to look at rather than just simply a 1 year's this is called LIFO reserve, right? Going back to the equation LIFO reserve, rather than looking at just 1 year's LIFO reserve, we need to look at the difference, the change or the difference, right? That formula comes from another slide. This FIFO cost of goods sold equals LIFO cost of goods sold minus the increase in LIFO reserve. So once we figure out the increase in LIFO reserve, we just subtract that increase from the and that's basically the difference between the cost of goods sold under FIFO and cost of goods sold under LIFO, and that's also the difference between the pre-tax income under LIFO and versus pre-tax income under FIFO. So we just need to calculate that amount, and that's basically negative. It's a 529, right? It's, the LIFO amount for 2009 is 529, and then we subtract, we minus the 7706, and that's, oh, I forgot the equal sign there. And then that's basically the increase in LIFO reserve, and that's the difference between the amount of cost of goods sold under FIFO, and that's actually the amount between the difference between cost of goods sold under LIFO versus under FIFO, because when you move this to the left-hand side and move the FIFO cost of goods sold to the other side, and that's basically, this becomes positive. So it's just an increase in LIFO reserve equals LIFO cost of goods sold minus the FIFO cost of goods sold. And then the LIFO cost of goods sold minus the FIFO cost of goods sold, that's basically the how much the cost of goods sold is higher under LIFO than under FIFO. But then again, the cost of goods sold, if not under LIFO, is higher, that means the pre-tax income is lower. So we just need to reverse the sign on that. So now the cost, the LIFO reserve, the increase in LIFO reserve is a negative number. And so that means under LIFO, the cost of goods sold will be lower than under FIFO. Hence, under LIFO, the pre-tax income will be higher than pre-tax income under FIFO. So we just look at this increased will be higher by how much? By this number we just calculated by 177, and because the pre-tax income increases, so the tax expense also should increase by how much? By this 177 times the tax rate. So we just need to calculate this times 35% and the tax rate. and forget about we don't have to consider the negative sign because that has already been considered by increasing or decreasing here. So, and then we just need to note the rounding requirement. Again, it's round answers to the nearest whole number. So it's gonna be 62. So I rounded it up here, 62 million. And so now let me check my answer. Save answer. So I guess that's basically this question. So let me first finish attempt to check whether I got these answers right. Uh, so submit or and finish. Um, yeah, I can submit or and finish and see whether I got this answer correct. So yes, mark, you can see that actually through this mark 9 out of 9. So that means I got all these answers correct here.